Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow down 90, NASDAQ off 35, S&P's off 13. They're going to be down 20 before I get off this 4 o'clock show. Gold contract down $3.40, traded $1,250 an ounce. Silver off 11 cents at $18.95 an ounce. Platinum down 13 at $1,385 an ounce. Copper down 6.5 pennies at $3.10 a pound. Light sweet crude flat at $92.66 a barrel. Bonds, we have the 10-year off 8 ticks at 124.22. 30 years down 6 ticks at 137.25. King dollar up 49 ticks at 84.29. It looks like that's going to take a rest. You got up to a higher high today, back down. Euro up 24 at 129.18. And the yen down up 28 at 106.31. Get ready for some action, folks. S&P, what do we have with the S&P? Cash S&P, this is where we are, folks. We hit a high today of 2001. We're at 1993. We're going to take a look at the future. What you're going to see, and this is going to be fast and furious because this has been building cause, folks. Right now, we're down 13. When I started the program, we were down 10. Your price projection on this right now is 1980. If you remember from 2 days ago, the larger price projection is 1975. This baby can hit today. Why? We just broke through the bottom, broke it with volume. If you take a look at this 10-minute bar, you not only have it with volume, but what you have happening simultaneously is this, is that we have just gave back 2 weeks, and this is unusual in the context of where we've been, meaning that right now the future S&P is trading at the 25th of August. What I expect we're going to have before I get off this air at 4 o'clock, never mind 5 o'clock, is that you're going to be back under 1985. What that sets up is, guess what? That sets up an S&P of 1890. It's a big number. Dow Industrials. We'll go take a look at the Dow Industrials, what you have with the Dow. They've been weak all day. Dow Industrials down 94 bucks right now. What you have, same setup there. Now, the Dow is already inside the not the lower range because we're in a high range, but the Dow being at 17,017, that wants to go down to 16,334. The composite, now this is the big one because the composite was the strongest one totally. Composite's off 41 bucks. That also is back to the 25th. In order for the composite to get a lot lower, though, it has to get inside 4485, and we're quite a way away from that. I expect we're going to get it. Why? Because if we go over to the 3Qs, what you have with the NDX 100 is this. NDX 100 couldn't handle higher price today, got to a higher high, giving it up in spades, and what that's all about, folks, is good old Apple. Apple brought him in, reeled him in, took him south, and there's going to be so many people that lose so much money on this, it's going to be disgusting. What you had is that the hype was out there, the whole ball was out there, started at 1 o'clock today. Apple went from a price point of 98 up to 103.08, and right now we're at 96. Apple, before we finish this baby, is going to be down at 94. It's going to be down $5. It can even hit 89. This is going to be a trip watching this thing play out because Apple just blew out its bottom on a 10-minute with some really good juice. You know, on that 10-minute bar, we just did 10 million shares. They're throwing everything at it. Now, watch this with Apple. This is what's amazing at Apple, too, is that if we take a look at, and we were talking about this a couple days ago because I was watching the buyers versus the sellers, meaning the large buyers, and what was really unusual is that Apple couldn't hold its high with Fidelity, who's the largest owner of Apple, continuing to buy stock. Well, guess what? Fidelity didn't stop buying stock. Even on the weakness of Apple, Fidelity bought an additional 17 million shares yesterday. So Fidelity right now owns 3.21% of the company as of the filing last night. Now, inside that context, right? So picture, they're buying 17 million. The largest sellers that have to show that they are selling, okay, are very small. You had Invesco selling 8 million yesterday, so they're moving their position out. Every single day, Invesco has been selling. They sold 8 million yesterday, and you had UBS. And UBS was small. UBS was like 2 million, yeah, 2.6 million. So when you take 8 million to 2 million, okay, that's very small in the context of Fidelity buying 17 million. What does that set up? What that sets up, folks, is that there are other buyers and sellers in particular, that are selling that stock away that don't have to file immediately. Those larger funds, for some reason, are filing immediately. Most of the time, you don't have to file unless you're over 5%. For some reason, they're filing, meaning that those were sold yesterday. But that, in that context, that's really important to understand. Bond market. Let's go take a look at the bonds. We'll start with the 10-year bond out here. We are at 124.22. And, okay, so you're coming to the top. This is going to be interesting. Okay, so you're at 1.1 million contracts out here today, and the 124.20 is the number. If you get back inside that, meaning it doesn't reject that price, then what you do have a game is 123.22. Thus far, you stay above 124.21, and we're at 124.22. And we do have lighter volume. That says that you can still stay in the higher range, which is the 126 level. When you take a look at the yield, this is amazing, we're still under 2.5. We're at 2.493. We take a look at the 30-year bond. We have with the 30-year bond. 30-year bond right now is trading out at 137.26. Oh, it's going to be cool, man. Check it out. 30 is going to reject lower price out here. Has already done it today. We got to 137.14. You're at 137.25. We did 296,000 contracts. That's nothing, folks. This at the high, we have 530,000. Bonds want to go higher, 10-year and 30-year. King dollar. Now, let's check this out, because King dollar right now looks to me that it's the end of the move. But what you have is this, on a short-term basis. King dollar today got to a price point of 84.65. 84.89 is your continuous contract swing price. You know, bottom line, I suspect it's going to back off there. Now, check this out. I'll give you the bullish and the bearish thing on that. This is what's pretty intense. King dollar itself has had a run that's extraordinary. It's gone straight up since July 4th. 79.75 to 84.52. The swing point up here is this 84.89, 84.99. When you back off right before you get to a swing point, and you've had this expansion of volume, wide price spread, all of the above, that's telling me that, number one, it's going to blow that away and actually go up to the 89. So, now in this context, we'll do the bull-bear setup in between the dollar and between the gold contract, okay? So, we're very close to the high. You got a little doji up there today. Things tired. I figure we back off. As we back off, now let's go over to the gold contract. What gold is doing, I'll bring up the GLD first so you can see this in case you don't have future contracts. What the GLD is doing, and the gold contract, and the silver contract is doing, that is coming into your December highs. That December high level of the low is 120.77. The volume on that, folks, is huge. You know, the volume at that was 63 million shares. Last week we did 30 million. So what I expect you're going to see is that is going to be a stopping point in gold also. And then what you're going to have is that the dollar's going to either go sideways or back down a little bit. Now, that will give room for the gold and silver equities to run. And if we go over to the XAU, this is what you're going to see. And this is where it's really close here, meaning it's teetering. And what I mean is that the XAU and the HUI still look that they can go lower for the next few days before you do get that turnaround. So this is going to be really a dicey trip in particular. The XAU's at 91.90. That baby can test that 87 area. There's a lot of twists and turns that are happening in this marketplace right now. Volatility is here, and that's a beautiful thing. There's S&Ps. Those S&Ps, man, this thing's going to get blown apart. Dow's down 99, Nasdaq's off 40, S&Ps are off 14. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow down 108, NASDAQ out 44, S&Ps are up 16. Now let's go over to our man, Mr. Basil Chapman. Don't forget, folks, at TFNN, we do 10 hours of live programming every day. You can get all that programming right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com, and you're going to see the Tiger TV playing on the right-hand corner of the website. Hit that. You're going to get Tiger TV. Now, Basil does an outstanding show each and every trading day, 11 to 12 Eastern Standard Time, coming this Friday, okay, with a nice volatile market, which is a beautiful thing. Basil's going to be doing a Master Trader Series. That Master Trader Series is going to go for a full 8 hours. Included in that Master Trader Series, you're going to get Basil's opening call, which is an outstanding newsletter that goes out every morning. That's $129 value. You can check out all the details on the front page of TFNN. It's going to start this Friday, 9 o'clock in the morning to 5 in the afternoon. If you can't make it personally, folks, it will be on your webpage for a full month. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day?
Yes, thank you.
Cool. So let's see. What are we looking at? I think I have the. What am I looking at here?
This is Apple.
This is Apple. Apple.
This is really interesting. You know,
yeah, I took a big bite out of Apple. Ow.
Great. Hope you're enjoying it. So I spoke to you just yesterday, and I was telling you that out of all the different chart patterns, it doesn't matter what we're looking at in the Chapman wave, the simplest way of thinking of the concept is to find the most obvious lowest low bar and then merely count each successively higher peak. I alphabetize them, so it's uppercase A, B, C, D, and it can go E, F, and G on the upside. On the downside, it's lowercase. And I thought this would be very interesting because when I spoke to you yesterday, I said the only missing ingredient so far, the index that is not,
you told me, yeah, right,
that did not make my leg D, and that's what I call my prerequisite leg D. It's got to get there.
Yeah.
Was that the NDX, the root, did go to D, but the Q's, I said I don't know what's going to do it.
Yeah.
Somehow or other we should get there. Well, I'm showing just the blank chart. This is a chart now with no, I've got candlestick pattern, but I could have used the bar chart. I use the candlestick just because it's easier to see.
Sure.
If you look at the lowest low bar of Apple on the 120-minute chart, at 93.28 on the 11:30 on the 8th, it made three successively higher peaks, Ds. So not only did it prove itself once, it went to a peak D right there at 11:30 on the 15th of August. It restarted and did another 4 peaks higher on the at 11:30 again on the 25th of August. And then what does it do at 11:30 on the candlestick at 11:30 on the 2nd of September? It makes D, and then it plummets down, and today it had that huge spike up, which is failing. So this is just the proof that the technique that I'm going to be teaching, you don't actually need all the MACD, stochastic. You can actually do it very often. I can even show you how I'm going to teach as 2 straight lines. Look at this. There's a straight line there, and I'll draw a parallel line. And look at this beautiful up channel. It goes to the top of the up channel, one trend line, and it gets repelled. Goes to the bottom, and it gets propelled until it finally fails at D, and it pulls back. These are just simple techniques. Now I'm going to go to something that I think is absolutely fascinating. The Qs were the only major index that the QQQ power shares. This is the trading vehicle for the NDX 100, the top 100 stocks, the largest 100 stocks. And the Qs today went to 100.46, 12 cents higher than the last peak, which was at peak C. I'm going to teach how you can use the rising wedge formation. And you remember I actually spoke to you, I used this as an example. I said, in this particular pattern, you normally go to the apex, and then the rule of thumb that you'd read about is that most of the time they say that's the top and you're going to go all the way down. I say no, no, no. What happens is there's still residual strength. What happens very often, and I had spoken about the Statue of Liberty holding the torch, and that hand right there, the little cupped hand, says there's enough internal strength to have what I call a Chapman wave, rogue wave, that takes you to the high. And then as it goes to the high, normally what happens is that all of those who got out say, oh, no, I should have stayed in, and the price hangs in just long enough for them to get back in. Oh. All the shorts get out because they say, hey, I've tried every single time, and it's just a losing game, and it hangs in just long enough. The bar that makes that rogue wave high closes at the low. If you were short, it means that if you're looking at the technicals, look at the way the MACD never even responded. It's still negative. Look at the stochastic, the red and green line there, still going down. So if you were adhering to the technicals that said very weak, you'd be correct right now, because that says that the short position was right. It was just what I call, you know, when I got the sign. It says in my CD. I don't know if I can find it in time. Anyway, it's not this. The page that says Rogue Wave. It says you go to the beach and there's a sign that says high tide at noon. So you sit, you put your blanket down, you got your suntan lotion, you got your dark glasses, and you're just about to sit down on your favorite rock right at the edge of the water when splash, this huge wave comes along. You wipe your eyes and you look around and the tide's going out. You know what happened? That's the Rogue Wave, and that's exactly what happened with Apple today. It gave you that opportunity to see a new recovery high. That's that D. And now we've got to be very careful because look at this. We've got the Dow, INDU, that's the Dow's made peak D, right? That's what we spoke about at 17,161. Now the MACD is turning down, the moving average, convergence, divergence. That's what I'll be teaching. These are really simple techniques. And then the slow stochastics pulling back. You've got the S&P SPX.X. peak D. You've got the New York Stock Exchange, 4 higher peaks. And it's hard to believe. Look, there's another peak D. These are key indices. Even the IBB, which has been the most powerful retracement, went to a new high in the retracement, went to an E, and is now pulling back. So that's why for my subscribers, we started our short positions, and so far they're looking good. We do have, remember I said that we've got Facebook. We still have Facebook. It's acted quite well. It's gone to, it's a rare leg F at this particular point. Probably going to make a new high today. I think a parallel high. But Facebook went to a new all-time high. It's one of our stocks. We're probably going to take some profits tomorrow. But these are techniques. If you're looking at this Facebook, there's a left side, right side price time match. This is what I would teach, how you can go a certain number of bars in a cup formation or an arch formation to the top or the bottom, and very often you can have almost the exact, if you can find the plumb line, and I teach how to do that, to find the plumb line to get 12 or 15 bars, whatever it is, to the left side, now to the right side to match that. And then I've got a technique that I call the inside wedge, and I teach how you can use these different techniques. It's a trajectory line. It says that at some point you should cross the horizontal line, and it gives you a date. And look, Facebook just missed doing that on the 26th of August. It did it a few days later and went even higher. So these are techniques. These are very simple techniques. A lot of it I'll take straight from my book, CD book, called Introducing the Chapman Wave Methodology. I show how you can use just the blank chart. I could have used numbers. I use letters, and those letters can give you up arrows and down arrows. And that's all on Friday. For 8 hours, we'll be going through this.
And folks, you can come over to our website at TFNN. You can see it right on the front page, the Master Trader Series that I'm at, Mr. Basil Chapman, Friday 9 to 5. Basil, you have a great one, safe one. Look forward to the show tomorrow.
Thank you very much, Tom. Have a great
week. Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now down 98. You get the NASDAQ off 35. S&Ps are off 13.5. Let's go to Janet in Toronto. Hey, Janet, what's going on?
Oh, I'm not in Toronto. I'm going there next month.
Oh, British Columbia. I'm sorry. See, I was reading your mind.
Yeah, that's great. We're having beautiful weather up here. It's gorgeous.
Sweet.
Absolutely gorgeous.
That is so cool.
Really nice. Tom, I'm wondering where to put my stop in Fortuna Silver on the Canadian.
Let's take a look. It's FVI. So, FVI.
I have it doing an ABC down to 458.
Okay, so let's take a look. So the low is 268, the high's 659.
But it seems to be coming into that swing point of June 17th and backing off now. But that's below the ABC down that I projected.
Yeah, let's take a look. Okay, so what you have, folks, with all the gold and silver stocks, okay, it's the 18th and 19th of June that are the benchmarks. That's where they had signs of strength. Many of them have actually gone by those points already. In the U.S., that point actually has a gap. In Canada, this particular one doesn't. 531 goes right over to 530, so it doesn't have a gap there. I put this on a weekly. Well, looks good on a weekly. Interesting. Okay. I like what this is looking like right now. So check this out. What you have, folks, is this. And this is when at the beginning of the program, I was talking about how this whole thing is teetering, meaning gold, silver, the dollar. Because it looks to me like the dollar wants to basically take a rest. Gold is making another bottom and wants to go higher. Some of the equities, some of the gold equities do want to go lower. Some of the silver, a lot of the silver want to go lower. A few of them are just like this, meaning that this has come into a sign of strength and rejected it. You put this on a weekly basis, and it's kind of neat. You know, we got down to 494 last week. Right now, you're at 505. Last week, we did volume of 2.4. So, yeah, you guys are open. That's interesting. Even if I add more from 3 million, you're going into 5.8 million. Okay, so your benchmark on this, Janet, it would be the bottom of that sign of strength right there, which would be 481. That's the first part. Let me do this ABC structure down. So let me see this. So you're taking, what, 645?
No, 577. I took 577 for my 8-point.
Okay, I'm going to take a little bit higher. I'm going to take it right to the very top.
Well, 645. Sorry, 645.
645. Okay, cool. Yeah, 645.
And then
526, right?
526. That gave $1.19.
Okay.
And I took that off
577, right?
That gave me 458.
Okay, good. Okay. And you've only made it, which is really sweet, down to 494, which is good. And we did break the B point. We broke it with volume.
Yep.
So, okay, so yeah, I would put, you know, when we come over and take a look at that March 21st level, March 21st. Are you watching Tiger TV by any chance?
Yeah.
Awesome. Okay, so March 21st, folks, what you had is this, is that you had a nice up day with some juice under it, some good volume. The high of that is at 448. That's where I'd throw the stop underneath that. That's how I'd, you know, basically lay that out.
So,
you know, it's another 50 cents. My bottom line is that, well, where'd you buy it?
I haven't got my thing with me. I can't remember where I bought it, but I think I'm in the money still, but not a lot. I got it before it went up, I think.
Yeah, no, I'm with you. Yeah, because this pullback here, percentage-wise, has been a big pullback, folks. Okay, like, you know, if we go back to June, the stock was trading at $4 and went all the way up to $6.50. So, but that's what golds do, coming off bottoms. You know.
Yeah.
You could put.
Yeah, I was going to say I've got March 27th for a sign of strength, not the 20. Oh.
Yeah, I'm just when I'm doing that. Watch, yeah. When I'm doing that, when I'm bringing that up, that's probably the week. I get the 21st. 21st.
Oh.
Yeah.
On a week. Okay.
You know, it's a decent looking chart. What you have with this chart is this. Is that you have a consolidation setup, and a few of them are like this, meaning, and at the top of the consolidation, you get some juice. You know, this equity, when it spiked at 581 to 659, that wants to get tested. You know, so you just got to keep your money management in place. That's what you got to do more than anything.
Mm-hmm.
And
go ahead. I was waiting on your gold report, the full report, and I haven't got it yet.
Oh, it's out. So
is it?
Yeah.
I went to the home page and I couldn't see either. Well, I'll check again if it's out.
Okay, I'll get over them and I'll make. I believe it's out. Yeah, it should be out. That's for sure. Yeah.
All right.
Okay. Have a great one, Janet. Have a safe one.
Thanks, Tom.
Thank you.
Thanks.
Okay. Bye-bye. Let's go to Terry in Orlando. Hey, Terry, what's going on?
Not much, Tom. How about you?
I'm doing great, man. Thanks for calling. Thanks for holding.
Hey, let's change gears real quick if you don't mind.
Okay.
And look at Dorchester Minerals, DMLP.
Okay, so let's see. Principal operating assets and net profits and working interest properties that own and produce mineral royalty, override royalty, net profits, leasehold interest. The question is, and what business?
Fertilizers, I think.
And fertilizers, okay.
Yeah. I just saw the chart. It kind of looked interesting as an ABC possibly with the low back in February at $24 and change and riding up to about 35, and now it's in kind of a B2C, up and down type of thing. Didn't know whether this looked like a chart that might be going back up again.
Yeah, this is pretty amazing, actually. Let's see. Yeah, but stay away from this thing. Don't even. So check this out. This is intense. Okay, so this has $1 billion market cap, and they only take in $13 million a quarter. Oh, is that right? 1 second.
I thought it was 130.
No, they're taking $18 million a quarter. Let me just see. Maybe I got the market cap wrong. No, it's $1 billion. That's insane. Right?
Yeah, it would be.
That's not even, that's like unbelievable. Yeah, don't touch this thing. Here, okay, so let's look at it technically. Oh, I see what it's doing. Oh, baby, don't touch this thing. You see this, Terry? Okay, so this stock, folks, traded at $36.49 in 08. It crashed like everything else. It went down to $16. It's testing that area, and the first test in July was 1.6 million versus 2.7 million. Don't touch the stock, man.
Okay.
Yeah, there's nothing here, man. It's amazing. It's amazing you can get $1 billion market cap with only taking in $13 million per quarter. That's insanity.
Yeah, I'd like to do it.
Oh man, we all would. How many? We'll sell everything, baby.
All right, thanks, Tom.
Okay, man. Have a great one. Have a safe one. Okay, so coming into the close out here, let's go back to that S&P. So the future S&P right now, folks. Okay, when it broke, you got to remember something, that even from 4 days ago, the larger ABC structure down is 1975. We've made it to 1983 thus far since the program started at 3. Now what you have is that you have this break in that 10-minute chart, so we're going to be back to 1983. I suspect that the shorter range here is 1980. That's where it looks like it wants to close out today. We'll see. Thus far, we still don't have volume also on the way down, though. Inside the S&P, the SPY, we do have an expansion of volume. Indice doesn't yet. SPY does. We're already at 72 million on the way down. That is saying, and we're at a price point of 199.21. That only has to get back inside 199.06 in your lower range. Once you're in that lower range, folks, the swing points from August 7th are going to be fast and furious. We take a look at the small caps out here. There she goes. Okay, the small caps out here. They have an expansion of volume on the way down. IWM, that's doing 30 million shares. That's after making a high out here of 33 million. Apple itself, okay, bottom line is that couldn't handle higher price. The volume was nice on Apple today, but the volume that it is actually going after, meaning that swing high, is still going to be dramatically lighter. Right now, Apple had made a high out here at 103.08. We're at 177 million. Apple's at 97.91. And what you're going to see coming into the close is that Apple more than likely will close at its lows, which is the 96 area. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. The Dow right now is down 106. NASDAQ off 43. S&Ps are off 14.5. We're going to be right back.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the Dow down 103 right now. Nasdaq's off 39. S&Ps are off 14. We'll go over and we take a look at palladium. So palladium has been on a run for a few years, an extraordinary run too, folks. Right now it's down at $25, and you get some juice behind this move. You broke a swing point. The swing point you're breaking out here is 870. That was, you did 6,700 contracts versus 66. That sets up a run to 839, and more than likely it sets up a run down to 810. So that, bottom. The run in palladium, by the way, folks, was absolutely amazing and is amazing. As to a precious metal, that it's a semi-precious metal, I guess, but the bottom line is that ran much further than gold and silver and platinum. Coming into the close out here, what you're going to have is this. If we go to the SPY and to take a look at the SPY, what you have, the SPY has an expansion of volume. You're at 199.26, and that's going to lay right before the lower channel. The lower channel is 199.06. We'll see whether we can get into that. When you take a look at this, we get 10 minutes to get into that bar. The spike is down there. The bottom line is that if the, let's see, 199. Now this is going to be so wild. So watch the parameter shaking this out, folks. When we broke at the, right when I started the program, at the 1,500 hours, 3 o'clock Eastern Standard Time. When we broke that broke the last 4 trading days, the range that everything was in. So in order to get to higher price, your SPY, if you're a bull, you want to see that baby get into 199.42 immediately. If you're a bear, you want to see it stay underneath it. I suspect what you're actually going to get coming into this close is going to go into the 198.91, which was the low of today. Why? You got a high volume low at that spike. You're going to see some heavy selling coming right into this close. Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on?
Yeah, would you touch T? It's following a 9-day moving average, letter T, AT&T.
You got Marbell. The low's 31, the high's 37. It pays.
Think that dividend could be cut over?
5.3% dividend. And not for the amount of bread these guys take in. And the phone business they've just figured out, the last few years, meaning, and we're all attached to phones like in an incredible way. I mean, this company takes in $133 billion with a B every year. So if we take a look at this, we put this on a longer-term basis. Okay, so I'd let it get down. I mean, you're at 34.62. It looks like it wants to test the 34.17, Victor. That's from August 8th of this year. That came down a little juice. Let me just put this on a monthly for a second. Let's pull them back with lighter volume. Yeah, you know what? I would hang there if you want to basically get into this, right? Just keep some patience, man. It looks like it will drift down to this 31.76, but it's it's inside. It's inside the top of it. The top of it is the bottom of that bar from March is 31.76. The top is 35.50. You're into it by 90 cents. It's like I'm giving it two different things. You're into it by 90 cents, and you have an S&P that has been at highs for a long time. So just on a normal retracement, which, this looks like we're doing it right now, it's saying, okay, that's not a big deal to just move down to that level.
Okay.
Okay, man. Have a great one. Have a safe one. 877-927-6648. What we are going to have out here, though, as this pullback is still light volume on the pullback. So in order to get to the lower price, to stay at a lower price, you do need an expansion of volume. Well, that's interesting. We have an expansion of volume, though, on the, let me get through this, on the NASDAQ. The NASDAQ has that expansion of volume. Yeah. We'll see how much volume they can put in the last 5 minutes. The last 5 to 10 minutes in these markets on a continual basis, folks, is where most of the juice is. Meaning there's going to be a lot of markets, a lot of volume put into the marketplace. As one of our tigers just said inside the den, that, the miners are coming alive. It's going to be interesting seeing this thing shake out, because let me go over to Rango Resources, because, Look at this. This is amazing when this happens. You know, it's amazing. See, they're right at that line. This is what's so cool. And this is what they have to show. They have to show a sign of strength. And they're showing the sign of strength. It's like, how the heck did they just come alive the last few minutes? And what's real possible is that as folks see this market going south, you get a transfer of stuff that's getting sold and stuff that's getting bought. And that's what it looks like, because this turnaround is pretty quick inside the miners. There's no doubt about it. If we go over to, in fact, let me go over to GG, because when I was doing the gold report, GG, Gold Corp, looked to me like it actually could go a lot lower, and that's what was worrying me, actually. And so this also turned around. That's what it needed. So Gold Corp got to 25 bucks, and what it was is that it couldn't hold price at all. The gap on Gold Corp was all the way up there at 26.16. It's like, okay, you know, but it's turning around. There's action there. You know, this is going to be interesting. So let's go over to the actual contract. You know, yeah, the contract just did it too. This is cool. This is cool. Okay, so the contract got to 1248. This is your benchmark on the contract, folks. It's 1259.60. Right now you're at 1257. And what that is, well, it's 1258.30 to 1259.60. And what that is, those are the highs of the lows in May and June. That's how this whole baby is shaked out. Now, what that says to us the next few days is that we're going to have some monster volatility inside the dollar. Oh, there goes the dollar. See, the dollar just went negative again. Yeah, that's what we have happening. The dollar's run, basically, yeah, that's what we have happening. What a trip. Huge run. It's going to take a rest. And in that context, as that takes a rest, I expect we're going to see the dollar higher, gold higher. It's going to be the gold's job, silver's job, as this dollar takes a rest, to hustle. Because each and every time that this dollar keeps going higher, you're going to see the gold get hurt. But the reality would be that they both can go higher, and that would be saying that gold is acting as a currency. And when you do look back the last 12 years that I've had the gold report, that's happened a few times. I mean, it goes from a currency to a commodity to a currency, you know. And right now, that's exactly what it looks like is happening. And yeah, hey, that's what makes markets. There's no doubt about it. Let's take a look at some of these Dow stocks out here. This is what you have. American Express is down $1. You got the oil stocks are getting whacked again. 3M is off 49 cents. You get Big Mac. Big Mac, forget eating McDonald's. They're having a big problem. That just blew out a bottom with Monster VOD. That thing's going a lot lower. This is Tom O'Brien. This is TFNN. Stay right there, folks. We'll be coming right back. We have the Dow right now down 95. Nasdaq's off 39. S&Ps are off 13. We're going to be right back. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This card's by Peter Usno. The point of living is to believe the best is yet to come. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow down 97, Nasdaq off 40, S&P's off 12.5, gold contract up $2.80, trading at $1,257 an ounce. Silver up a couple pennies at $19, actually up 14 cents at $19.11 an ounce. Platinum down 10 at $1,388 an ounce. Copper down 6 pennies at $3.10 a pound. Light sweet crude flat at $92.75 a barrel. Bonds, we had the 10-year down 9 ticks at 124.21. 30-year off 5 at 137.26. Both of those, by the way, folks, rejected lower price with lighter volume. They both want to go topside once again. King Dollar made a higher high out here today. Gave it up on price slightly. We're down 116. We're trading at 84.12. What I expect you're going to see here is that the run of King Dollar, we're going to go sideways, back off a bit. That's going to give gold, silver an expansion on the way up. Euro up 50 at 129.45, and the yen up 11, trading out at 106.8. 14. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is what you have, folks. We're at 1987. Cash S&P. What does that do? That gets you back inside the lower range. 1991.39 was the number. What does that set up? That sets up a test of 1928 to 1904. It's a big number on the way down. So we got back inside that range, and what we did, the volume is light. You're going to need expansion of volume as we get to lower price. If we go take a look at the SPY, that correlation of the SPY, you had a slight expansion of volume, but you're going to need a lot more. The SPY out here, the SPY closed at 199.32. Now for the SPY, the SPY, that is to get back inside 199.06. The cash S&P, by the way, is the most important, though. That's the bottom line. Why? Because the cash S&P does not trade. All 500 stocks have to trade in order to generate that cash S&P price. Dow Industrials, we take a look at the Dow. Dow is off $90, big deal. 97. The Dow, however, is inside the lower range, has been inside the lower range, hasn't been able to get over the high. That was generated on the 17th of July. What does that set up? That sets up the Dow wants to go down and test 16,333. Inside the Dow Industrials today, the strength was United Healthcare, but you can see it was only up 65 cents. Microsoft was up 29, Coca-Cola was up 16, and Walmart was up 21. The dragging it down, you had Home Depot down $1.89, Big Mac was down 141, Goldman Sachs 272, and J.P. Morgan Chase 83. Inside the, and this is important to wrap your head around, inside the XLF, folks, this is the financials. That came down today. First time that it was, number one, that was rejecting higher price, and what you had is that this came down with volume expanded. To get inside the lower range, however, you're going to have to come down. It come down 24 cents today. It would have to come down another 24 cents. Let's get back inside 23.06. BRK, let's go take a look at Berkshire Hathaway. That is the largest weighting structure inside the financials, okay? Bottom line, that $1.39, that's going to need an expansion of volume also. You know, yesterday went to a high with 2.5 million. You come down with 2.8. That's not a large expansion of volume. Goldman Sachs. We take a look at Goldman Sachs and J.P. Morgan. Goldman Sachs did have an expansion of volume on the way down. That gave up $2.50. J.P. Morgan also had an expansion of volume, 14 million. It's a big expansion of volume for J.P. Morgan. So that's saying that the top of the consolidation that both of them have been in, have been tested, failed. That's going south. Story of the day, Big Apple, no doubt about it. Apple, what you have with Apple, Apple went to a high out here today of 103.08, gave it up, closed at 97.99. If we do put this on a weekly, the reason I'm going to put it on a weekly, because what you have is that last week it had tested the highs of 100.72. It did it with lighter volume. So check this out, because this is going to be important this week. Why? Because we got over that high, which is 100.72. The volume for the week was 500 million. Last week when we tested that, you did 323 million. We add another 100 million, you did 400, okay? This week, thus far, we've done 235 million. So it's going to be important. Number one, can you do the 500 million, which today we did 188 million in Apple, so it'd be very easy to do. And where's the price point going to be? That's the kicker here. Thus far, Apple gave it up, sucked everyone in, gave it up in spades. You know, when Apple came out with the watch, it went from $98 up to $103. The amazing part about it, folks, on a fundamental basis, is that I had just about 3 weeks ago, I got a new Samsung Galaxy, and they're trying to sell me the watch at the same time, and it's nothing new. The bottom line, Samsung got watches. Everyone's got those wearables right now. There's nothing land-breaking in this whole deal. So I suspect it's not going to be able to keep traction, get traction. Gold market. Let's go take a look at gold. We might have a turnaround here. We have a gold as this. Gold was down at 1248 today, rejected that level, and rejected that level when, in fact, we're only talking the last 20 minutes in the marketplace. It's going to need more juice, though. Bottom line is that the spike down was at 1:30 this afternoon. Start building a little juice up. And without too much volume, it's spiked higher. If we go take a look at the GLD, what you have with the GLD, I really like what happened there because that was testing. You know, when we put this up on a weekly basis, what you're going to see is that the number on the GLD on these tests is the 120.77, and you're at 120.87. That's a beautiful thing. And in particular, what you do have at the top of these consolidations that we're in, you have volume at the top of the consolidation. So this has been quite a consolidation on the way down versus how we're going to go topside. Bonds, they refused lower price once again out here. TYZ for, let's see. The 10-year right now, she is at 124.21, 1.1 million contracts. The 30-year is actually in better shape than the 10-year. The 10-year is still yielding 2.496. 30-year is, there she is right now. 30-year is at, went to a 137.14. We're at 137.25, and it only has to stay, yeah, no, it's got to get inside 137.29. That's what it has to get inside of. Light volume out here today, 313,000 contracts. That's saying that 30 is going to go back to 140. Looks like it just even set up another larger ABC structure on the way up. So the bond market continues to want higher price, which equals lower yield. King dollar, check this out. So King dollar has been on a run extraordinaire. Makes a high out here today of 84.52. Does 42,000 contracts, which, by the way, is huge contracts. Okay? So that level has been a straight line move since $79. I suspect we're going to just back off. That back off is only going to be on a temporary basis. And what it's doing, when you look at the continuous contract, is that it's backing off right before the swing point. That's about as bullish as you can get. Your swing point up here is 84.96, and we hit 84.52 today. If you do the back off here, you start building some cars, what that's going to set up is an $89, which is just amazing. So we'll see how this whole thing does shake out. You've heard the promotion, I'm sure, many times about the Tiger Real Estate Investment Fund. If you're looking for an investment that is an investment for 4 years paying 5% on a first mortgage, we have a first mortgage program at the Tiger Real Estate Opportunity Fund. You can go right to our website at TFNN. I did a little 6-minute video so that you can see exactly how that works. It's under breaking news. Dow Industrials closed down 97, NASDAQ off 40, S&P's down 10.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 97, NASDAQ off 40, S&P's off 13.5. And as we do each and every Tuesday at 20 past, the second hour, we get our man, Mr. Andy Hecht. Andy, folks, has an outstanding show right here on TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Also has a great newsletter. It's the Technomento Commodity Newsletter. The way you get that is you come over to our website at TFNN. When the newsletters, go into Trading Newsletters, the Technomento Commodity Report. You can test drive it right here, right now. And don't forget, as soon as I get off in the next 40 minutes, Andy's going to be coming right up with an outstanding show. Andy Hecht, what's going on?
How are you?
I'm doing great, man. What's happening?
Good, good. Not much. A nice little pop-up in gold and silver last couple of minutes of the stock market here. But I'll tell you, it's kind of telling me maybe the dollar's getting a little toppy here.
I think that, the dollar did what it should have done. And it's coming up to a swing point, and it's backing away. And,
yeah.
that...
I mean, gold could be, validating that.
They both are. And folks, today was so close. Let me tell you, if you get the gold report, you know what I wrote in, and that's what I wrote. I felt that the dollar was topping and gold was bottoming, but it's a close call. That's the real bottom line.
It's a close call. We'll have to give it. We definitely have to give it till tomorrow to see if that action is there. The action in crude oil. Let me put a crude oil chart up here. Is not so good.
Thank God.
That's kind of ugly. I mean, this XLE, I do not like this XLE.
The XLE, there's no doubt. When you have the XLE, your B point on this XLE, folks, is 94.49. We hit 94.59 today. You hit this with 9 million, there's 13 million there. If you go to the largest weighting, which is ExxonMobil, guess what? It basically is below the swing point. That swing point is the 97.63 or 97.39. So we did 9.7 million versus 10 million. So that's sweet. That's saying Exxon, man, wants to run down to 93. You get Exxon at 93, man, that's going to destroy the XLE in about a heartbeat. So
Right. The other thing that I'm seeing here is, Brent crude cracked through 100.
yeah.
So, that's not so positive. And the longer-term oil spreads, the October 2014 versus December 2017 spread, is down at around, let's take a look here where I got that. One sec. We're down at around, $5, $6. That was 17 3/4. So
wow.
That's telling me that, oil's moving towards flat to contango from backwardation. And that's not positive.
And gasoline, look at gasoline unleaded, folks, at $2.54. It looks like it's going to go to $2.25. So it's
it looks very weak here, and the crack spreads are down, and that means that the refiners, the Valeros, the Chevrons are not going to make as much money. So doesn't look good. But the other energy, the natural gas, looks good today.
Yeah, it popped for you today. I saw that. You know what's cool? We want to keep on the radar here. Your good friend Andy Hall, when this oil gets, real low, I want to be all over that, man.
I agree. You get it into the 80s. I want to see 88, 87.
Well, no one wants it. No, I'm with you, man. There's no doubt.
I want to see the curve flat there. I want to see it trading at 88, 87 across the board.
Good. Well, you let me know when that's happening, man.
I certainly will let you know. There's no question.
Seriously.
As far as natural gas, the pop we're getting, the temperature in Calgary later this week, 27 degrees.
Oh.
That's why we're getting a pop there. Seems like some cold weather going to come into the plains.
Yeah.
So that's putting a little bit of a bullish tint under that. Now, very interesting. Grains.
Okay.
Grains made new 4-year lows today.
Wow.
All of them. Corn, soybeans, wheat. All of them. But a little interesting tidbit I picked up. Soybean output in China is going to decline more than forecast to the smallest in 22 years. Farmers are planting corn there instead of beans. So
in China,
the bean crop is really good. The recent rains are making the pods very big. We're going to have a very big soybean forecast. So I am short term. I am still, we've hit my target. I've been saying I'm looking for beans under $10 a bushel.
Okay.
We're there now. I continue to think beans will go lower into, the next couple of harvest weeks. We have the USDA, the big USDA crop report coming out on Thursday. And
man, this farming business is a tough business.
Longer term, beans could be a buy.
Yeah, this farming business is a tough business. These grains, these poor farmers have got killed, man. I mean, look at corn went from $5.14 to $3.44, man.
Yeah, and I always look at these intercommodity spreads.
Yeah.
The corn versus beans, but quite frankly, here a little bit lower, I throw it out the window because all of the crops become pretty crappy.
Yeah. Isn't that
in
wild?
terms of the prices?
Yeah. And I guess, when the type of strength we have in the dollar makes a difference, too, because a lot of this gets sold overseas, right?
Yeah, it does make a difference. It does make a difference. But that's certainly not what started this thing going. This thing started long before the dollar started to rally.
Right.
It's all based on the fact that the crop is record this year. It's enormous. And in terms of corn, Tom, there's a huge amount of inventory still left over, even before this harvest.
Interesting. Yeah.
So there's a lot of corn, there's a lot of soybeans, and there's a lot of wheat around. So, that's why prices are 4-year lows, and we're back near, more normal levels. But
it looks like
the world changes.
It looks like the bacon, the hogs are going to go to $1, right?
Well, cattle is about a half a penny above the all-time highs right here.
Wow. Let me pull this up. 162. That's so funny, man. I just remember trading cattle so much at $1, man, and it's to $1.06. It's like
80 cents to $1.
And folks, just so you understand something, cattle. The reason I used to trade it a lot, right? Cattle would only move like a penny or 2 pennies. It never moved a lot. You just had to make sure you were always moving it out. Do you know what I mean?
Yeah.
It wasn't a volatile trade when I was trading it. It was like I was kind of digging it. I said, this is all right. 2 or 3 pennies is cool.
It's been a nice trending commodity this year. Every dip has been a buy. Every single dip. Now, the interesting thing here with the hogs is hogs are at a 51% premium to cattle. which means that pork is half, it's 50% cheaper. Beef is 50% more expensive than pork.
Yeah.
And, consumer choices can come in here.
Oh, there's no doubt. Yeah, I can see that. Of course, cocoa is still hanging up there, man.
Well, cocoa's come off a little bit from 3,300 down to just under 3,100. That's a long-term demand-based rally. I think we're looking for places to scale down by here. The interesting thing today, base metals. Base metals gave it up in a big way.
Okay.
Iron ore prices traded at the lowest price since 2009. Copper really tanked down to support, down to around the 310 level. Nickel down today. Aluminum down. Zinc down. The specter of higher interest rates is kind of hanging over that market, and slower growth in China is hanging over that market. So I've been saying for a long time, it's interesting, there's been a divergence that aluminum and zinc and nickel were all doing very well. Copper was really not doing anything, and copper is really signaling that maybe those things were a little overpriced.
Yeah, interesting, man.
And Valley, the company you look at, Valley?
Yeah, I can't handle it.
Looks weak to me. Looks very weak.
No,
to
it's going to, last week it had that high volume low. It's going to get tested. That 1223 wants to get tested, man.
Absolutely.
Listen, folks, you stay right there. Andy's going to be coming back with you 5 to 6 tonight. Andy, you have a great one, safe one, and we look forward to the show tonight.
Take care, buddy.
Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finished down 97, Nasdaq off 40, S&P's off 13. And if you do have an interest, folks, in the first mortgage program that we do have, right under breaking news, there's a 6-minute video that you can check out that video. I walk you through exactly how it does work. Okay, so let's take a look at the 3 Qs first, the NDX 100. What do we have with the NDX 100? You got to a higher high today, come off the high, and you come off the high with slightly expanded volume, to 36 million shares. So what we have is this. In order to get the lower price, you'd first need an expansion volume tomorrow, which I expect, by the way, we're going to get. You still have to get back inside the lower range, which is 97.51. And right now, you're at 99.25. Inside the NDX 100 itself today, the weakness what had to do with Discovery. Discovery Communications was down 191. There's actually 2 different equities here that are Discovery. This came down with some juice, though. It had hit a high of $44 last week. Come off that high, had hit the high with 600,000 shares, come off the high with 1.2 million. It's going after a lower gap right now of $38. Right now you're at 40.25. The second one was Amazon. Amazon came down hard. Oh, yeah, and then Discovery. You have Discovery A shares and C shares. The A shares were down 153, and the C shares were down 191. Amazon came down $12.59 with some real juice. Now, Amazon had gone up, tried to fill the gap. The gap on Amazon was 358. It got to 346, 349, couldn't handle it. Had the expansion of volume. Amazon, I suspect, first off, is going to run into the 304 level. Bigger yet, though, when you do look at Amazon and look at how the setup is, Amazon, it looks to me, was the first one off the high, period. And we're talking off the high. Amazon made its high in January of this year. That high was established at $408, 408.06. First leg down was vicious. So this looks to me, folks, that you got a very large ABC structure on the way down. If that's what you have, 406 is your A point, 284 is your B. So it's a monster. So what is that? 116? Well, it's $122. That would get you 122 bucks. Yeah, 242, and right now you're at 329. That is one heck of a move. Micron Tech, that was the fourth one that was taking juice out of the NDX 100. That was down $1.15. That come down with 20 million shares after making a high out here yesterday at 17 million. That wants to run down to the price point of $29. Larger yet, though, it looks to me that this baby's going to get down into about the $24 level. That's the way that's set up right now. Some of the American Express, that baby come off the highs. The financials come off the highs with some juice in them. American Express looks like it's a large ABC structure on the way down. You have two different swing lows that have volume. The first one that it wants to go after is the 85.75 level. So we'll see how the rest of that shakes out. Some of the Dow stocks out here. Oh, let's go to Big Mac, okay? So McDonald's, folks, is having big troubles technically and fundamentally. They came out, let's see what they say, what they come out with their, look at this. Whoa. The Japan sales dropped 25% on the China chicken supply. Yeah, there's no way I'm going to eat chicken out of China. It's not going to happen. Okay, so same-store sales fell 25% year over year in August after the company's Chinese supply acknowledged food safety problems. That's intense, man. 20%. Okay, so McDonald's Corporation, the world's largest chain, posted the worst same-store sales decline in a decade, hurt by sluggish demand in the U.S. and a health scare involving Chinese suppliers. Sales at stores open at least 13 months fell 3.7% in August. That's unheard of. That's pretty intense. McDonald's, which has more than 14,200 new locations, is facing challenges from home and abroad. You know what the amazing thing about McDonald's, folks, is that they are the ones that nourish Chipotle and then send it out, which is, they just must be, like, driving themselves crazy right now that I'm pulling Chipotle up just to see if they still own any stock at all. I don't believe they own, I think they sold everything. And the amazing part about it, though, is that they had it right. Chipotle was only a 3-store chain when McDonald's took it over. Yeah, I don't see that they own Chipotle at all anymore, any shares. So they took it over, they ramped it up, and then they pushed it out. You know, and the bottom line is that you can see, if you go over to CMG, this is just amazing. Chipotle right now is a $20 billion market cap, $20 billion. If we pull this back from their IPO, which, you know, McDonald's would have, oh my God, this is pretty sick. So check this out. So when McDonald's pushed this out, it was pushing it out, I believe, at $22. Let me pull this up. And it's $669 right now. And it's not that long ago either. Let me pull this up. Okay, so, yeah, $22. That was in 06. So January 25th of 2006, McDonald's pushed it out at $22, and it's $669. And that's one of those deals that McDonald's is just going to absolutely regret for a long time to come. If we take a look at McDonald's, right now we're at $91. We put this on a larger chart. She's been in distribution since November of 2011. Now, this one's going to get really interesting, and this is why. The longer that you're at highs, folks, with light volume, and this has been at highs with light volume since December of 2011, that drop can be substantial because it takes that long for funds to get out of stocks. Once they're out of stocks, they'll give it no support whatsoever on these dips. The way McDonald's is set up, it's a $64 stock. It's screaming at $64. And $64 was the high of 08. So we'll see how that shakes out, but that's how that is set up at this particular point. ExxonMobil wants lower price. In fact, when we take a look at some of the oil and gas sector and the financial sector, you had ExxonMobil down 38 cents. Chevron was off $1 today. Oxy was down 20 cents. You had Halliburton down 48 cents. The financials, you had J.P. Morgan Chase off 83. Wells Fargo was off 40. Goldman Sachs 271. American Express 103. Visa 149. Let's go over and take a look at Visa and American Express. So what that's all about, folks, yeah, see, these things aren't getting hurt yet. The Apple announcement out here was that, okay, so they're going to also, try to get into the mobile payments business. Apple introduced new iPhones featuring digital credit cards, leaping ahead of mobile payment providers that have been working for years to make wallets obsolete. Apple Pay, a feature unveiled today alongside a fresh crop of gadgets from the company, uses sensors to let people pay for goods and services by swiping their smartphones. Apple forged alliances with Visa, MasterCard, American Express to boost the use of their devices. It's old news, folks. You can use Google Wallet. I mean, there's a million things you can use. The real question is, are people actually going to use their phones on a continual basis to pay for bills out of their bank accounts when the fact of the matter is you get Home Depot, you get Target, that each and every time that you use your credit card in particular, you're putting yourself at risk. So the real reality is that you take your phone and everything you're going to start using, you're going to start hitting the phone. I doubt it. I don't see it. And in fact, there's a story out here today in Mexico. So check this out. This is pretty cool, actually. This is where the bureaucrats are against the citizens on a continual basis. Ethically, we'll see where this shakes out. But the bottom line, what they did in Mexico is this. 2 years ago, folks, I guess no one pays taxes in Mexico. A lot of people don't. But they charge a lot on their credit card. So they put a bill through the Mexican legislature that they can go through your credit cards now. And what they do is they take a look at how much you spent on credit cards versus what you paid in taxes. I'm sure our own IRS probably does that on a continual basis. What has happened in Mexico is that instead of credit card use going up, credit card use has gone down by over 4% because everyone's using cash. The more that I see about electronic and digital, the more that I suspect that more people are going to start using cash. Or they should. If you don't, folks, okay, and if you don't have cash stashed somewhere, you're putting yourself in harm's way for absolutely no reason. Just think about it, okay? And it was a great question out here today. And what it was is this, is that you had Target that has got compromised. You have Home Depot that's got compromised. We just haven't heard about the banks getting compromised, folks. And I'm going to talk about that as soon as we come back. 877-927-6648. Stay right there, folks. Come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day from 8 a.m. till 6 p.m. We then take that programming and replay it. You can get it 24 hours a day right on your cell phone at TFNN.mobi. If you'd like to get Tiger TV, just go to TFNN.com. You can see the Tiger TV playing on the upper right-hand corner. You can just hit Watch Tiger TV. The TV will get delivered as well as the audio. Now, let's go take a look at overseas. We'll start with the UK. Inside the UK, what you have is this. We're at 68.29, and the FTSE hasn't been able to handle the high of the consolidation that's been for a full year. It's very unusual, folks, when you see, it actually goes back to October 13th, October of 2013, rather. And it just can't handle these highs. And the consolidations are pretty solid, meaning the top of it is like a 68, 6,900, and the bottom of it is out here at 64. We're back, going to make our way to 64. DAX in Germany. What you have with Germany is DAX in Germany, which likes to trade like the NASDAQ, by the way. we're at 97.10 right now. That hasn't been able to make its high of the 10,000. It's right up to ICE. ICE is generated, meaning we're going to get a lot of resistance, was the 9,800 level. Never quite made it there. Made it to 97.73. So we'll see how we come off of this level. What I do expect, you're going to get a little pressure on the downside tomorrow. What the DAX in Germany does have is this, and this is about one of our best clues as to where this market wants to go. The DAX, as our own NASDAQ, has gone much higher, yet it has many high-volume lows that have not been tested. Now, what it also has is this, and this is where it gets intense as to the aspect of channel lines and what channel lines are all about. This little baby, when it actually had broken a channel line going all the way back in 2011, it hasn't been able to get outside of that particular line. And it higher priced in an extraordinary way, no doubt about that. How we trade tomorrow is going to be important. The reason being is that when we broke downtown last month, you got outside that line for the first time since September of 2011. So it's pretty intense. It broke it, and it didn't break it with conviction. So a break with conviction would go like this, that you have wide price spread. What we've got, an accelerated volume. You didn't get the accelerated volume on the way down. We got the wide price spread. What it has done this month thus far is that it's trying to get back inside the range. And it got back inside the range in the beginning of the month. To get back outside that range would be down about another $100 from where it is right now. So that number is going to be really important to watch. We're at 9,700 right now. You get into this 9,600, which we were there last week. You're outside the range. That means you're in a whole different ball game. And that ball game, we haven't been in that ball game in the DAX since 2011, which is pretty amazing because, of course, we're at 2014 right now. As Andy and I were saying, King Dollar, it looks to me like King Dollar is going to back off. Huge expansion on the way up. That's going to give gold and silver a chance to run. And what you're going to be looking for is you're going to be looking for an immediate sign of strength, folks. What you have had in that market is you come back to the June 18th as well as June 19th days of strength. You've come back to the May and June swing points, the highs of the lows. And you've done it with dramatically lighter volume, by the way. And this is the third time that we've been back there since the initial low was put in June of 2013. So the amount of cars that were built is cool. The highs that we have in that market are impressive. Not great, but they're impressive. So now what we're going to be looking for is one more accelerated sign of strength as you go higher. To finish this up with the bond market, bonds continually want higher price. The 30-year is much stronger than the 10-year right now. The 30-year is really in decent shape. And if you are looking for a mortgage out here, don't wait, folks. That's the bottom line. I do expect that bonds do want to go higher, yields want to go lower, but I can't, you can get a 30-year mortgage right now at 3.9, 3.85. That is an amazing number, actually. Okay, if they get down to 3 to 5, good luck. They go to 3 to 5. But bottom line is that, just in case these things go the other side, I would be out there basically trying to get a mortgage right here, right now. Walmart. Let's go over to Walmart. Walmart is teetering once again. What we did with Walmart, Walmart made it up to ICE. ICE is this 77 number. Came back off that yesterday. And we'll see whether, Walmart wants to get back in this lower trading range. Walmart's the big number, one of the big numbers for the Dow. The reason being is that it can't seem to get away from the range that has been trading in. Now, we've been trading in that range since July of 2012, so a full 2 years. But it's having a hard time, and the volume is so light, it's amazing. I mean, you're talking about no volume up at these highs. And, of course, what does end up happening, the longer that you go sideways, at a high with light volume, it's just more distribution that is taking place. We go over to Big Blue. We talk about Big Blue. Big Blue, same way. Big Blue was a 189. Can't make that 210 level. When you take a look at it on a longer-term basis, this spells real trouble because this has been in distribution since July of 2011. That's a long time. But you got to remember something, that Big Blue has a huge amount of shares. You're talking about, yeah, 1 billion shares. You have 1 billion shares outstanding. That's about as intense as you can get, folks. You stay right there. We got our man, Mr. Andy Hecht, going to be coming up next with the Technomental Commodity Hour. He'll be growling and prowling with you out here. And don't forget, folks, at TFNN, as you come over to the front page, you're going to see the Master Trader Series with our man, Mr. Basil Chapman. Basil does an outstanding program each and every trading day, 11 to 12 Eastern Standard Time. Coming this Friday, he's doing a Master Trader Series that's going to be from 9 o'clock in the morning to 5 in the afternoon. What you get with that is that you get the opening call. That's his great newsletter. That's $128 value. You're going to get, what's that, 9? That's 8 full hours on Friday from 9 to 5 o'clock, and the whole series is only $795. What we're looking for in the S&P tomorrow, I'm looking for more weakness coming into it and with an expansion of volume. We're under the 1991. That says, bottom line, you're going lower. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Stay right there. Andy's coming right up. Go get him, folks.